Welcome. I am so excited to bring to you today Daniel Nikic. And Daniel is a global investment research expert and founder of Coherent Research. He has over a decade of experience. Daniel has analyzed more than 15,000 companies in sectors like AI, software, and data, helping venture capitalists, high net worth individuals, and entrepreneurs make informed investment decisions. Raised in Canada and now based in Croatia, is that what it is?
Yes, Croatia.
Okay. He specializes in US, European, and Middle Eastern markets. Daniel is passionate about empowering clients and mentoring entrepreneurs on market strategies and innovation. Wow. Welcome, Daniel.
Well, thank you for having me.
Glad to have you. Okay, well, let's jump right in. Okay, decoding the global markets,
Yep.
investment insights across continents, because I'm sure they differ.
Definitely. I think it depends on where you're going to look in the market, right? So, for example, I would say when looking at certain parts of the country, you have to also look at what their main industries are, because they usually get their business ideas from the problems or from their experience and education. So, based on my experience, I would say that you would see, like, for example, if a country has a lot of, let's just say, good healthcare, there's going to be a lot of startups that are going to focus on healthcare. Let's just take, for example, Middle East. Now there's a big focus on ag tech companies and sustainability, despite having a lot of oil resources, right? As we know, Saudi Arabia, UAE, Qatar. But they know they have to diversify their economy. So they see opportunity there, or in some ways, a lot of the startups there, they want to work with oil companies because they already have partners there, right? Because you want to try to get revenue as quick as possible if you're in a startup. And I think United States is a specific story for itself because it's such a big country, hence the financial capital and innovation. We like it or not, America is one of the most innovative countries in the world. Just look at Silicon Valley. Most companies, it doesn't matter if they're from China, they could be from the UK, anywhere in the world, they all want to target the American economy. Why? Because they know there's capital there, and a lot of the times these startups can get acquired by big conglomerates or big tech companies such as Google, Qualcomm, Intel, and etc.
Mhm.
And another thing, you have to understand the culture. There's always different ways of doing work and cultures. Some would say, for example, I would say North America, they're very good at sales and marketing. But if you look at Eastern Europe, they're very technical because based on their education, they're more pushed in terms of mathematics and tech. And if you look at some of the startups that are popular, for example, Grammarly, that came out of Ukraine. Or you look, for example, Meta, which is before Facebook, it came out of North America, the States, but because America is more social and in terms of marketing, etc.
Wow. So yes, that makes perfectly good sense. Basically leaning toward what you're best at.
Yes, correct.
I get it. Okay. So how do you, let me just get this framed right. How do you access untapped economies? Because I know there's some economies out there that people aren't really tapped into. So how does that work?
Well, I think you have to look at in terms of those, you have to have a local partner or meet with the local peoples. For example, I'll take, for example, me getting interested in the Middle East, Saudi Arabia. I had to talk with the local venture capital investors and startups to get and pick their brain, what they see potential, what are the certain industries that they see that it's worth investing in, and where are the opportunities, where are the gaps. And you have to respect the culture because in some ways, for example, America, Western Europe, they're very fast in doing business. Other parts of the world, they like to take their time. They want to know you. They want to build trust. And especially when dealing with startups and venture capital funds, you have to build trust because it involves money. And once you give someone's money, you're not getting a guarantee if you're going to get it back. For example, you have a company startup and we meet within a week. Oh, I'm going to invest in you. You can have you could try to protect yourself with the clauses in the contract and everything, but it's not guaranteed. And moreover, I would say when dealing with emerging markets, you would be surprised how much opportunity there is to impact. Because if the country is not as developed, a lot of companies or startups that say are founded in the States will probably have more success if they focus on emerging markets who might need their service more because there's not as much competition.
Yes, yes, and that makes perfectly good sense. And I heard you talk about trust. To me,
Yeah,
that's the really most important thing, because I know for me, and I'm not a great big company, I like to get to know people before I do business with them. I don't do business like online where you just sign up and you're in. I'm a conversational person. I want to see you. I want to talk to you, and I might want to have a couple different couple times where we're meeting, because relationships to me is one of the most critical pieces in business.
I agree 100%. And in my circumstances, I'm based in Croatia. I would say 99.9% of my clients are outside of Croatia. Some have been online. And in order for me to develop those relationships, I had to pretty much show what I'm capable of doing. It could be from sample worth, or sometimes it would be, let me do a little free sample for you, and we can build slowly.
Mhm.
And interesting enough, a lot of times with those type of clients, I talk to them more than people that I deal work with face to face. And you with I think when you're doing a project or working with someone, you kind of build a relationship slowly. In
Mhm.
some way, probably closer than people that you consider close friends, because you're dealing with stressful situations. And you know how they usually say you want to know someone very well, be in a stressful situation with them, see how they take accountability and etc. And I think respect matters a lot too. I think in order to trust someone, you have to respect them.
Absolutely, absolutely. So it's a lot of little ingredients involved, but I'm with you with the relationship and definitely the respect, because I might see things one way, you might see it another way. So how can we come to a happy medium?
I agree.
For sure. Wow. All right, let's talk little bit about the AI revolution, because that is like here and now.
Yes, for sure.
So how's that changing the investment landscape?
Okay. So I remember the first time I got really into AI, it was around 2017, 2018. I was working with a fund. And that's when I heard a bit voice tech, imagery, machine learning, sensory. And to me, it was like hieroglyphics because I used to have a BlackBerry. And it's not because I'm Canadian. I liked it a lot.
I
It
did too.
was easy for me. And I remember people, they call me the email person. I'm not into social media. Like, oh, Daniel likes the emails, communicate via email. And it was just so easy, the keyboard. And initially, there was a lot of AI companies, but it cost so much money and research and development just to train an AI model. And in my opinion, I believe we're still in the augmented AI stage, which means that we still need human interaction to make these AI tools work. And I would consider AI more of a tool than an industry, because it can be influenced in every industry, kind of like the internet, let's just say back. But I think it's a huge innovation. I definitely see it changing the world. And I think if an investor is going to invest in an AI company, they have to consider it's going to take time for them to generate revenue. Because, for example, if you're training a model, you need millions of data points, especially if you're dealing with imagery. or say with these autonomous vehicles. I remember at a conference a few years ago, and this one speaker said they were dealing with autonomous vehicles. They said just for a tree, we have to train 15,000 trees. No, 15 million, pardon me, 15 million, just so a car can recognize it. That's how much training it needs. And obviously we're with OpenAI when it released ChatGPT, that definitely changed a lot. But I still think it's important to audit the AI results. You can't take it as it is, as we've seen. And generative AI is still not the full AI. Because I remember looking at companies, they were talking, I remember one company, it was about 4 years ago, it talked about giving electronics emotions. So say your laptop is saying, I'm hungry, feed me. So if you connect to the battery, and I was like, this is like iRobot, one of those futuristic movies. But in some ways, I do think it's it's like every kind of evolution in ways. There's going to be good things and bad things. I think the good things, it will definitely help with healthcare in terms of radiology imagery. It can detect diseases or help prevent cancer spreading into level 4. And also it'll help analyze a lot of data points like machine learning. Because I'm used to looking at data points, it can be very tiresome. You need to have something to keep you going. Maybe you put on music, listen, sing, or something just to keep you motivated. But
Yes.
I think a lot of it's also some companies that I've noticed, they use the term AI and they're not really AI. It's usually just basic, well, I wouldn't say basic coding because coding is difficult, but it's not really automated. So I think it's more like formulas and et cetera, the coding to make sure that it operates properly. Though I think some companies will fail, some companies will succeed in this new revolution. But I think it is very important to learn about AI if you're going to be competitive in this business world. I'm not saying you have to learn how to code, but you have to understand it and you have
Yes.
to learn how to use it. And I do think it's going to make us to use, humans are going to use more insights. So you get this information, what's so valuable about it? We're going to have to think more. But it also depends. Are you going to use the information that you have or no? Because we have more information than ever today. And
Yes,
it
we
makes you, and when you think of it, kind of like back in the day with the calculator. If you use it on it, you knew how to do multiplication by hand. Sometimes then now you have a calculator as you get older, as you get more advanced with technology. So are you going to use it to make yourself more competitive or to have more skill sets? Or are you going to use it to just make your life easier, but in the long run, it could hurt you? But I do think a lot of jobs are going to be created due to AI. But I think everyone has somewhat of that fear. Are we going to be taken over like the movie Terminator stuff? Though you have to be positive, and I think there are some good implications with AI. It's getting rid of a lot of the bot work that's quite
yeah.
repetitive, and you're not really learning anything. And in some ways, it could be depressing doing
Right.
like the repair work, but it could help so too. In some ways, there's going to be those who are going to have to maintain these robots. There's going to be those who's going to audit the AI models to make sure it's properly done. And I don't think we're going to be fully automated past the augmented AI stage for at least another 5 years, in
Yeah.
my opinion.
Yes. I think it's moving quickly, but it's still in development mode. I'm with you
Yeah,
on there because I'm in the process right now of trying to train to put a bot on my website. And that requires training
yeah,
because it doesn't really know me. It doesn't know my company. It doesn't really know questions that people ask me. So I'm going to have to input all of that.
definitely. And one thing that's interesting, I was reading about it and it said like a lot of the companies that are getting funded are mostly AI focused that are software because that's the big thing. And when you're saying training, it's going to take a lot of time because I've dealt with training AI models with startups I worked with. It has to be, what if it says this? What's the synonym of this? What does this mean? And you have to have 20 similar words just for one simple word. And you have to keep on training it. And especially if you're going to use voice recognition. Because I remember with Siri, maybe it's because of my Canadian accent, it didn't recognize it initially. And I'm like repeating myself. And I see it with my children, they're playing around with it too, because they find it interesting. But sometimes it just does not recognize your accent, say if you don't speak a particular accent, and that goes with voice recognition. It's going to take a lot of time, but there's some interesting companies too. I've seen companies that cloned like famous celebrities or politicians, their voice, and you're like, wow, you feel like it's the exact person. But it also brings up another topic, which is cybersecurity, deep fakes. How are you going to deal with this? And there's a lot of CEOs who are having big issues with fraud because someone thinks it's actually them because of their voice and stuff. It's like, no, because they can just see through interviews, podcasts, or and AI model can recognize it, copy the accent, how they pronounce words, and then use it for fraud. So I think there's going to be, sadly, it could be sad depending, but cybersecurity opportunities too. What's real, what's not? We see with these videos, pictures.
Yes, it's got a lot of good stuff and also a lot of potential for bad actors to mess up everybody. So yeah, you definitely got that right. And I think that's one of the biggest fears of a lot of people is, you know how people do. They go to the negative before they go to the positive. How some
I think
folk
that's
are.
human nature
Yeah,
in a way.
yeah, I think so too. So when you are working with companies, can you define what your company does? Let's put it that way.
Okay. So COHRES, or in other words, Coherent Research, we pretty much do the grunt work to allow an investor make an investment decision. So similar to what an analyst or associate or principal does for a fund, we do that for funds. And the reason why I came up with this idea is because I worked with a company that was analyzing family offices. I noticed, okay, a lot of these family offices, they have their own venture capital funds or they invest in these venture capital funds, and you see they look into startups. So let's just say, for example, you're a fund and you're interested in a health AI company that deals with patient care. I'll be like, okay, I'll look into the company, but I'll look into market. What are the recent transactions in this market? What are the recent exits? Who are the key players in that market? Who are the key investors? Because maybe there's a fund that invests earlier than you in the earlier stage that you want to work with. And who would you want to work with after? Say if you invest in this company, who would follow on your investment? And also do the market research in terms of the company itself, look at the technology, the team, where they are in the fundings, and analyze their finance. Because I do have somewhat of a background in accounting, so I know debit has to equal credit. And as much as people do not like to deal with finance, I think it's very important if you're going to succeed. Just have a general knowledge about finance, like being able to read financial statements. I'm not saying you have to be an auditor, but you should know that, especially if you're going to be a founder. And dealing with cap tables. What type of previous investments have they had? Do they have convertible notes? When does it expire? Is there a discount? So there's so many factors that go into before investing in a company. And another thing that I think is very important that I assume a lot of funds do is what's the exit scenario? Because I believe some founders that I've dealt with, some know, but some do not. They have to understand venture capital funds are in a way kind of like a startup. They have to report back to their investors. It could be pension funds, it could be endowments, it could be family offices, it could be high net worth individuals. And then a lot of times, if managing partners of these funds, they invest their own money, they need return on investment too. And they should consider it kind of like a bank loan because it's not really your money. You have to be careful, right? Because there's also what type of shareholder are they preferred? Are they common? So I analyze all that stuff for fun. So all the grunt work.
Yeah.
But I like it because you learn a lot and you learn a lot about what industries are doing. And one thing that I've learned a lot from the funds I work with is that they really want to look at the idea. How did someone come with the idea? And this one partner that I worked with at a fund, really inspiring. I would say probably one of the most humble people I've met. And he would say, what's the idea that they come up with? And they said, if it's something personal, that's very important because you know they're going to be passionate about it. You want them to be able to go with the tough times. And based on all the investors or startup founders I worked with, the ones that have been able to manage stress seem to succeed the best, in my opinion.
Yes, and that's an important attribute of business is stress, because at
Definitely.
some point you're gonna get stressed.
Oh, yeah.
You can almost count on it. When you have a great day, you better be thank you, thank you, thank you. This was a great day. Because the stress
Yeah.
is business that's part of business, the stress stuff. So if companies want to work with you, how do they do so?
So a lot of times it's through my network, or also they can contact me. Probably best is via my personal website, danielnikic.com, where you can find the companies I work with. And I'm very responsive. That's one thing I've learned dealing with people in the VC and startup ecosystem. You have to be responsive because they're so busy.
Yeah,
And interesting enough, I would say the people that I find have the most stuff to deal with, they're the most responsive because
yeah,
they are so organized. They just have to, and they prioritize what's important to them. And yeah, so that's the best way of reaching out. And then you can see my contact details. And I'm quite responsive. So if someone reaches out, they'll get a response, most likely within 48 hours.
yes. And I love that because I am one of those kind of people, I've got this time in my head. I need to respond to people within 48 hours, and it's like clockwork because I know how I feel. If I send you something and you say nothing, I feel some kind of way.
Yeah.
And already I may not want to do work with you just because of that little teeny thing you didn't respond to me. So
I understand. Yeah.
yeah, because I realize people get busy, as I know I do. 48 hours to me is ample enough time, even for the busiest person, to say something.
No, that's true. I agree.
Yes, yes, indeed. Okay, let's we talked to I'm like really, really understanding, how the work that you're doing, because this is like you said, it is grunt work, and most investors don't want to do that.
They don't, and also in some ways they don't have the team to do it because it takes a lot of work. And say if they, it depends how they want to manage their fund. Everyone has a right to manage. There's some funds that have 60 people in their fund that do the work that I do. Some are like, you know what? We just want to have our managing partners. We'll do it in-house. If we need someone, we can outsource it to someone like me or someone else. And I think in some ways it allows the investors to focus on their thesis and to make a decision. Because when you're dealing with a lot of this work, it somewhat distracts them from looking at the strategy of what they want for the fund because they're looking at a different lens. And it, I would say you do get a little bit emotional too. Because you talk a lot with the startup founder stuff and you build a relationship, and it's hard to make a decision after analyzing their I would say information and talking with them constantly for weeks to you build a relationship with them. There is some trust.
Mhm.
So I think in some ways it allows them to really focus. And at the end of the day, they have to deal with their LP investors. So they have to make sure that they're reporting to them. And there's several other stuff that goes outside of just like analyzing companies. They have to deal with communications, the legal.
Yes.
Legal stuff, which is definitely a big aspect. And I think they're also a lot of times they're fundraising. Once they have one fund, they have to fundraise for another fund. It's just an ongoing cycle.
Mhm. And I think just based on the work that you do, I think it could be cost effective for a lot of companies, because if you've got 60 people doing what you do, I mean, I'm just twirling the numbers in my head, that could be quite expensive.
Yes, in some funds there's less, but I think it also depends. I think one thing that's definitely changed is outsourcing because we've seen it in the manufacturing industries in North America, and in some ways a lot of funds probably feel safer outsourcing because there's not a legal agreement, contract agreement. They can work on a project basis, ad hoc when they need someone, and they could develop a relationship that way, and then it could be long term. Or and sometimes they probably feel more at ease that they don't have to train someone to do this work. And they're like, don't have to deal with training. I don't have to deal with giving them office space. Da, da, da. They have all this stuff. I just have to deal with work with them. And that's it.
Yeah. Yeah.
And I think, as you know, being an entrepreneur, you think about work 24/7. So it's in my best interest to deliver the best product for them.
Yes, yes, yes. It's like you're right. We thinking about it business when we ain't doing business. You know, we could be watching TV and see something. Oh, I need to try that in my business. Just little things that spark creativity, I should say, in your business. And it could happen anytime and anywhere for sure. Wow, this has been amazing, Daniel.
Thank you.
Very, 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 you dropped so many good gems here. So, smart investing for the early stage companies. How does that, what can you talk about there? Because,
So I think when a company is early stage and you're an investor, say if they're pre-revenue, you really look at the team. You really analyze who the founder is. And you think about sometimes investors want to deal with someone who's a serial entrepreneur. And interesting enough, a lot of investors and even successful entrepreneurs that I've worked with, they really value people who've gone through failures. And the reason they say that is because they know how to deal with real stress in the business because it's you failing. It's not, say, you're working for a big company, let's just say Hershey's. I'll just use Hershey's chocolate, for example. Like, it's not, no, it is you as a person. If you're a founder, entrepreneur, because you're kind of, in some ways, it's your personal brand in a way, because you're representing this. And I would say in the early stage, they look at the market, they look at the gap that this startup is trying to fix, and also can this team deliver if it's really early stage. If it's already by the time that they have a product that's available and they have some revenue, they look at their pipeline. Who are their potential customers? Are they most likely to go with them? And why are they going to use this? Why do they need our funding? Why not go with a bank loan? And interesting enough, a lot of entrepreneurs and startups, they want to work with VCs or investors that's really going to help them in other ways. It could be startups really tech focused. They might need a VC to help them, help us with marketing, help us network our thing. Yeah, we have a good idea, but we just can't get over that hump or just open the doors for us. And it could be bring us to these conference, market us, da da da. And that's why a lot of these big VCs, if they have success, and they had big returns. Say if they invested into Uber or say Twitter or Facebook or Meta, sorry, or X. Sorry, I'm using the old terms. That's a huge, I would say, track record, not only for these funds getting funding, but also in relation to startups, because they're like, hey, they help these guys out, they can help us out. So I think the main things is team, market, the pipeline, who are the potential customers, and if they already have revenue, and what's their burn rate? What are they spending their money on? Because it also matters, how are they, do they have good cash management? And interesting enough, I was at this conference, Leap. It's a big conference in Saudi Arabia. I think it's around 100,000 people attended. It's from sports tech, healthcare. It's really really amazing conference. And I was talking to one VC investor, very interesting female. She worked in Korea, America, and we were talking, and she said, if you have a product and stuff, already try to get clients before it's released. Get them interested, da da da. That's what she said is the one thing that she really values. And one thing I would say about early stage investments is a big risk. Not every startup succeeds, but if they have a good exit and say if it's tech, a lot of investors, they look if the company has a patent, because that patent could be very valuable to be acquired. And it's kind of like a warranty. There will be something out of this in a way. It won't completely fail.
Yeah, so that is, and one of the things you brought up is risk. So how do you manage risk?
Well, for an investor, you really have to do a good due diligence. And that's kind of where my expertise comes in. Looking into the market, look deeply into the company, look at their financials. What are their legal agreements? Do they have investors that can have like a convertible note? So for those who don't know what a convertible note is, it's pretty much, say if a startup gets a loan from an investor, they have to repay that amount in relation to a certain date. It could be in 2 years or by a milestone when they get the next fundraise. And that's important for investors to know because they want to know what their money is being used for, or they could that loan gets converted into shares, but in a discount, it could be a 20% discount. And it could be preferred shares. And if it's preferred shares, then this investor, they have voting rights. And then when it comes to liquidity and voting in relation to the management of the company, they have a big say in it. So those are a lot of stuff that you have to look into. And also, you have to look into the team. Do they have, let's just say, a bad history with fraud? And there's a lot of aspects that you have to look into. And it goes back to what we discussed earlier, trust. You have to build that trust. And it's I wouldn't say it's a gamble, but it could pay off, but you really have to do your research. And I know some might be like, oh, it's a great company, you look at their website and stuff. No, you got to dig in. You have to talk to the person. And I think a big factor is, do you want to work with this person? Do you like the person? That's one thing I notice with some of these investors. They say, do I like this person? Because you're going to have difficult conversations with them.
Mhm. Yes, yes. So there's so many ingredients involved, and people need to be aware of all of this. And Daniel, do you do any like in addition to what you do, I know that keeps you pretty busy, but do you do like classes or like for cons- I want to say educational stuff for startups?
Well, I do have a network. Those who know me in the network, I have assisted them, but I haven't done any courses per se, as you're mentioning. I have trained interns and I've had and employees and stuff. I had never really looked into doing courses, and there's so many resources today. You see, there's these masterworks, and there's a lot of online courses, and even YouTube. Some people might not find valuable. I think the best way to learn about something is hear other people's experiences. Listen to podcasts. Like I'm constantly listening to podcasts when I want to learn something, and you'll be interested, or read. Believe it or not, reading still is a good tool to grow and learn.
Yes, it is very much so. Even though people like pictures and videos, reading is definitely still in. So,
Definitely.
Daniel, thank you so much for dropping all these gems on us. And again, if companies want to work with you, how do they reach out to you?
The best is to check out my website, danielnikic.com. So DANIELNIKIC.com. And you'll find my contact information and the companies I work with, or just reach out to me on LinkedIn. I'm quite active on LinkedIn too.
Okay, I was gonna ask you, are you on LinkedIn? So
Yes.
that's good. Okay, well, we're definitely gonna have to do this again because I
Okay.
learned a lot, and I know my listeners and viewers are gonna learn a lot as well. So thank you so much for all that you've done in this conversation, because it was a lot, but you made it sound very doable. And I mean, you explained it very well.
Well, thank you for having me. It's been a pleasure.
Absolutely.